coming back to the last topic, which is CIP assets. So what is CIP assets? CIP stands for construction in progress or construction in process. So generally you are supposed to calculate depreciation only on that particular asset when you start using the particular asset. But take an example, you are constructing a building, okay, which will be used in your business, and you want to start depreciating on that particular asset. But you cannot start depreciating on a particular asset unless and until the construction is completed and unless and until you start using the particular asset. So building is one example. So the construction of the building may take say a couple of years or sometimes couple of months or couple of years. So what you do is you create something called CIP asset. The steps will be you create something called CIP asset with starting a zero value, okay, and then so this particular CIP asset is created example on 1st of January 2017, okay, that is before starting the construction of the building, okay, and then in January say February, when in January end you have started constructing of the business, sorry, the building, and in February you have incurred an invoice amount of say 150,000. Obviously, when you're doing a construction, then you incur expenses to build that particular asset, right? And in March you incurred another 250,000. In April you incurred another 500,000, and so on. Okay, now you are in October, or rather say September. Also, you incurred something else, say some 10,000 rupees. So every month, what you do is you create an AP invoice. Okay, using a track as an asset. Using a CAP clearing account in the AP invoice lines distribution. Okay, send it to FA, and in FA you bring over this particular 150. I'll explain you all those. Like I will show you all those steps. Okay, you create that AP invoice line using a CAP clearing account, and then you come to FA, and in FA you bring over after running of your prepare March additions and post March addition, you bring over the particular 150,000 and add it to the CAP cost. March again you do the same thing, you add it to CAP cost. April you do the same thing, you add it to CAP cost, and September you do the same thing, you add it to CAP cost. At the end of the September, now the data or like the balance which is available on the CAP cost is 910,000. Okay, you are accumulating your CIP cost over a period of time, and in the month of October there is a screen wherein you can do something called capitalizing of CIP asset. You go to that particular screen, select this particular CIP cost. Once you do a capitalizing of an asset, the balance will move from CIP cost to the actual asset cost, and this will get created as an asset, and then you can start depreciating on this particular asset. So that is the concept of CIP asset. You are accumulating the cost during construction in process, and then bringing over that into CIP clearing account, and then at the end of the construction of that particular asset you capitalize that particular asset. Only once you capitalize that particular asset, system will start calculating depreciation. So this is an example not only for building. In any large corporation, whenever if you want to build a large machinery, that will also take a couple of months. Take an airline industry, you know, to build an aircraft, that will take a couple of months. Even though I worked for a client called Qantas Airways in Sydney, so they purchase the aircrafts from Boeing or some other companies, and once they purchase that particular airlines, it will take at least couple of months for them to bring over the particular asset, assemble that. Okay, once they purchase the aircraft will be brought and put it in a hangar. Hangar is the place where you store your aircraft, and then you do a coloring, you do a remodeling, you do actually a couple of other things, and it will take a couple of months before they start actually using that particular aircraft in their airlines industry. So during those months, whatever the cost which is incurred for maintaining of that particular asset and for remodeling, for painting and all those things, they will be created as an AP invoices, and they will be brought over to your CAP clearing account, and then you actually capitalize that entire cost, and then you start calculating depreciation on that particular asset. Okay, now we will see how we can proceed with those steps. First, adding up of the zero amount CIP cost, and then create one or two AP invoices, bring over to a FA, add it to the CIP cost, and then capitalize that. Go to asset workbench. quick additions. You can say test CIP asset category. It could be same computer software. I mean, in our example, it should be actually plant and machinery, something like that, but that's fine. Asset type should be CIP. Okay, as soon as you enter CIP, if you observe, by default it is a capitalized. You can enter a cost, but as soon as you select to CIP, your cost will be 0. So as I said, the CIP asset should be always created with a 0 cost. Select the book, Reliance Corporate. Location, select some location. That 107574. That is my CIP asset. 107574. Okay. Now go to AP, create one line, which is this one. ABC vendor, site Ahmedabad, invoice date. I mean, it can be today's date. So I'll say ABC FA CIP 100, some 250,000. Go to lines, 250,000. Go to distributions, and here you should use the earlier when we are actually creating a normal asset, we were using the asset clearing account. Now we should be using the CIP clearing account, which is mentioned in the asset category. Okay, now click on tools, show field, track as an asset. So track as an asset checkbox is automatically checked. Okay, enter your corporate book name, Reliance Corp. Save this. So again, same conditions, validate, account, transfer to GL, create accounting, run in a final post, so which will do an accounting as well as it will transfer to GL. Okay, now run the same again mass additions process. GL date, pick up all the lines which are have a GL date on or prior to 8th of October. Sorry, Reliance Corp. So the only difference for the normal asset and the CIP asset is everything is same. Only thing is, instead of selecting the asset clearing account, you are selecting the CIP clearing account. That's the one change in AP, and in FA also there is one change, one more change. Wait for this particular mass additions program to be completed.
Hey Arvind, one question. The integration between AP and FA is via this mass addition creation and the clearing accounts, whatever we are selecting in the distributions. Is that the only two?
Yes, that's the only integration between AP and FA.
We just need to ensure the correct asset account so that the AP invoice will be marked as an asset tracked invoice line.
Yeah,
and
not
create the.
Yeah, from an accounting perspective, it's not asset cost account. You should be actually selecting the asset clearing account.
Okay.
Fixed assets, Reliance INR, go to mass additions, prepare mass additions, and what is my invoice number? ABC FA CIP 100. Okay. It is also in queue status. Click on open. Enter all other details, expense account. Hang on. Before I do that, here what you need to do is, this is the asset line which has come from the AP. Now if I click on open and enter all these details and change to post, what will happen is it will try to create a new asset, but we do not want to do that. We want to add all these CIP line, all the lines whatever is coming up here, okay, to this particular CIP cost, so that you can capitalize that particular cost at the end. So what you need to do is you need to click on add to asset, pick up the asset number which is a CIP asset number. This is the CIP asset number. Click on find.
No, it is 170, Arvind.
Sorry. Oh,
It is
170.
170.
Oh yeah,
Mm.
you are right. Yeah, 170. Yeah, I think today Pradeep is more attentive. Yeah, right. Okay, so 170,574. Click on done. So I am adding this particular asset, the 250,000 to this particular CIP asset. Okay. So similarly, you can create couple of more assets, and you can bring over from AP to FA and add it to the CIP asset. Okay. Now assume that we have already done all those things. Now we want to capitalize this particular cost. How we can do that? Unless until you capitalize, the system will not calculate any depreciation on the CIP assets.
Arvind, the mass addition thing, right? Is it a manual process every time? I
Prepare
mean,
mass.
managing it. Yeah, prepare mass additions.
Yes, unfortunately, it's a manual process.
So if I have 100 CAP assets, then I'll have to keep on adding for each of the invoice.
Yes, yes, that's true. I know, like in some of the clients has actually raised the concerns as to why Oracle has not given automation or something like that, but unfortunately, that is what it is.
Okay.
Okay, go to asset workbench, sorry, assets and capitalize CIP asset. Now pick up the book name and pick up the asset number which you want to capitalize. Okay, this is the asset which we want to capitalize. Capitalize. Okay, one transaction record applied and saved. Okay, now go back to the asset workbench. We have capitalized the asset. What about the other 250,000 one? Let me just go back to that mass additions. I think we missed one more point for that ABC FA 100. We have, sorry, ABC FA, what is that? CIP.
CIP 100.
Yeah. It was on hold. I think we clicked on add to asset, but we forgot to change this particular status from new to post and then do a post mass addition, which I think we did not do that. So this is okay. Now we can do that. I'll change the status from new to post, enter my expense details.
I think you selected cost adjustment something.
Hang on. No, as soon as I change the status from on hold to post, automatically it will change to cost adjustment. The reason being, if you remember, before coming to this particular screen, we have clicked on add to asset. Okay, you are trying to add this particular line to the existing asset. So when you do that, automatically the status will be cost adjustment. And when you do our next step of post mass additions, system will pick up all those lines which are in the status of cost adjustment as well as post. Okay. And what is my depreciation expense account? 7360. Okay, select some location. Okay, now save this. Okay, it is in cost adjustment. Okay, Now try to run the post mass additions program. So let me check this. Okay, it is added. Now go back to this our CAP asset which is capitalized. You should be able to see this particular cost asset workbench. Go to the source line. You should be able to see the line, and go to the financial inquiry. You should be able to see the 250,000. Okay, so the difference for the normal asset line and CAP line is you do this more or less same process in AP. In AP, ensure that you select your CAP clearing account. Once it comes to FA, you need to do two things. One is click on add to asset so that this particular line, when once it gets into FA, will get linked to the CIP asset. Okay, you need to click on add to asset as well as perform other process, change the status from new to post, and then enter your expense details and your location details. But the other thing is, like when you try to change the status from new to post, you will be able to see the drop in the drop down post. But when you try to save, automatically the status changes to cost adjustment, and then run the normal process of post mass additions, which will pick up those assets, and the system will add that particular what you call line to the existing CIP asset. There is also another scenario for the normal assets also. Today you have created an asset for 100,000 rupees. Okay, so take an example. There's a laptop. Okay, the cost of this particular laptop is say $1,000. Okay, and you purchase some additional item for this particular laptop. Okay, you want to include that particular additional item in the cost of the laptop. So that additional item is say $100, which is a say CD driver or something like that. Okay, what you do is you create for $100 another AP line. Okay, use the asset clearing account, come to FA, you click on add to asset button. When you click on add to asset button, click on add to asset button, and then select this particular original laptop asset number, which is 100, whatever it is, and then again follow the same process, change the status from new to post. Automatically it will changes to cost adjustment, and then enter your expense account and location details, and then run your post mass addition. So this add to asset functionality is used in both the scenarios. One is in the case of CAP assets, and even in the normal assets also you use that particular add to asset functionality. So add to asset is basically adding an extra source line to the existing cost of the asset.
But uh, but
Yeah.
similar thing we can do it in revaluation also, right, Arvind?
Which revaluation are you talking about?
I mean, when you explain the scenario like revaluation means it can be increasing the asset value or decreasing the asset value over the time.
Okay, so
Uh,
I got what you're trying to say, but understand the proper reason when you use your revaluation. So the revaluation is basically, I have got my laptop example, which is say 100,000 or like 100,000 rupees or say $1,000 example. Okay, I estimated that the life of this particular asset will be say 5 years. Okay, this is say HP laptop. I spent life of 5 years. I started depreciating every month as every year. So first year, at the end of the first year, my depreciation is $200. My net book value is $800. All of a sudden, the technology which is used in this particular laptop has become obsolete, and we do not want to use this particular laptop. So in the market, if you try to sell this particular laptop, you will not get $800. You hardly get $50, not even more than $50. So the value of that particular asset has been declined or depreciated or like reduced in the market, and in order to reflect your books of accounts with the proper market value, you are revaluing this particular asset, and after your revaluation your net book value will show only $50. So that is the revaluation. This particular adding of an asset is a concept wherein you have an asset of $100,000 or say $1,000, and then for this particular asset you are adding an extra value add to this particular asset. So $1,000 is a laptop. Take an example, you purchase some software which is costing you a very good software which is used in your business, and hence you want to depreciate that, and that particular software cost you say $500. Okay, and for some reason you want to include that particular $500 not as a separate asset but as part of the existing laptop cost. Then you create for that $500, you create your AP invoice line, come to this particular screen, click on add to asset, and then your cost of the asset will changes from $1,000 to $1,500. And there are again appropriate depreciation calculations in the system. For the first $1,000, whatever system has calculated, now $500 is added. There is some depreciation calculations in the background where system will take care of calculating the depreciation appropriate. Does it make sense?
Yeah, I got the point, but what I understand is predominantly for revaluation, whenever there is a reduction in the cost price of an asset over the market comparisons, then revaluation will come into picture. Adding an asset value is nothing but you are topping up the value of an asset.
Exactly, yes. Okay, so again, these are just a couple of examples. There could be various other business scenarios in any organization. So this is just a couple of examples. Okay.
Okay.
Okay. Coming to the last one, Oracle standard reports. So I think we did not run the create accounting, right? I'll also show you the create accounting. Okay. Before running a create accounting, ideally the process would be run the depreciation. Okay, by checking the depreciation checkbox. Run depreciation. Sorry, depreciation. Okay, click on the close period, run button. Okay, so now we ran the depreciation multiple times, so there is no actually kind of a duplication. System will try to now rerun the depreciation only for the new assets whatever we have created between your earlier run and now the current run. Okay, if there are no new assets which are created, then obviously this particular depreciation process will not create any kind of a depreciation entries. Okay, but closing of the period is possible only from this particular screen. There is no other screen wherein you open or close the period. Okay, and now once the period is closed, you can go to your book controls. Query for our book Reliance Corp. Okay, as of now it still says current period is October 17. Okay, and last time when you ran your depreciation is 8th October 11:30. Okay, now the current depreciation program is still running. Okay, once that is completed, you should be able to see the current period as November 17. So that means October will be in a close status. Wait for this particular entire depreciation request set to be completed, and then go back to that particular book control screen, and then you will be able to see the latest open period as November 17. And also once you go to this particular run depreciation and enter your book name, automatically November will be defaulted here. See, November is defaulted here. Looks like the request is completed or it's still in the process. Okay, you can see in the I think most of the part is already completed. So if you see here, Reliance Corporation latest open period is November. If you check Reliance tax, it is still October because we did not close the tax period. And also go to this system control, sorry, not system control, book controls. See, now you can see current open period is November 17 and last depreciation run is 8th October. Earlier it was showing 11:30, now it is showing 12 p.m. because that's the latest run. Okay, and once this depreciation is run, the next step is run create accounting, which will now transfer the all accounting entries what system has generated for asset addition, asset transfers, asset depreciation. This system would have created various accounting entries. So book type code is Reliance Corp. Detail. Ideally, you should put a last date generally because you will be running this particular program on the last day. Accounting mode final. Once this particular program is completed, you can go back to your GL responsibility and you should be able to see the journal entries related to FA. So can anybody tell me like what is the responsibility which are now I need to use to check the journals?
General ledger Reliance INR.
Exactly. General ledger supervisor Reliance INR because it is linked to INR. We should not go to the general ledger supervisor Reliance CAD or Reliance USD. Okay, while it is running, let me go to general ledger, super user, Reliance INR. That's the responsibility wherein I should be able to see these journals. I think we are good. I think we should be able to see the journals. Journals, enter. Source is assets. So these are all the journals which are created. So we can see that there is one. Okay, I'll query for only say October period. We can see one journal one journal batch for each category. For additions, there is one category: adjustment, transfer, retirement, depreciation. In a month, if we did not do any of these things, we just ran depreciation and we have just added a couple of assets, you'll be able to see only two batches. If we did not do any adjustment, transfers, or retirement. Okay, put your cursor here. Click on review journal. Okay, put your cursor here. It has actually consolidated. That is how we have set up. Click on line drill down. Okay, here you can see the breakup of those journals. So you can click on view transaction. It will take you to the FA transaction screen where the asset is added. Okay, so this is the details of that particular asset which is added, and that 50,000 is the breakup of that, the 50,000 related to that. So similarly, you can put your cursor for each of the row, and then you will be able to see those details. So this is how even drill down work for the fixed assets. Okay, the last one is the standard reports. So there are a lot of standard reports. Couple of them are I'll give you the details of all the standard reports in the training material. So a couple of them are the asset category listing, which will give you the details of asset categories. Asset additions report, which will give you the details of asset additions by cost center. Uh, Asset register report, which will give you the details of all the assets. But in most of the client have gone for the custom reports for the asset register is concerned, because the format is really weird as far as this asset register is concerned. So in our current client, we have almost gone for the custom report for almost all these. For asset additions, we have got a custom report. Asset register, we have a custom report. Asset category listing, we have got a custom report, because the formats are not what you call easily understandable. If user look at that particular format, he'll not be able to understand what that particular report is actually showing the details. But again, most of these reports are not XML reports. If these are XML reports, we can change the format using your XML publisher. But these are not XML related programs, so hence we need to go for our custom reports. And also from a reconciliation perspective, also you can run this asset additions report and try to compare this particular amount with the journal entry which is created for the category of asset additions. Similarly, for asset transfers also we got some report. Asset transfers report. So run this particular asset transfer report, and the balance whatever is there in this asset transfer report should be matching with the GL balance which are created, or GL general batches which are created for the category of transfers. Similarly, for the asset retirement, for asset adjustment also we got similar kind of reports. You can run those reports and try to compare the balance in those reports with the GL. Maybe we'll just try just one asset addition. Asset additions report. What is the period? October. While it's running, let me go to GL and bring up those journals which are created for additions. So this is the addition entry, 315,000. So ideally we should be able to see the same 350,000 in the asset addition report. Yeah, you can see the same 350,000. Okay. Similarly, you can run your asset adjustment report and try to match that with this particular report, asset transfer report, retirement report, journal entry reserve ledger report, to match the balances in that particular report with these journal batches. Okay, so that's the last topic in the FA. So next week will be the last week. On one day I'll be covering AGIs and another day I'll be covering the EB tax. So any other questions before we close the session for the day?
No.
Okay, thank you. Thanks guys. We'll meet next week.
Thank you. Bye.
Okay, thank you.